The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, welcome to the Tuesday edition here of the Small Cap Roundup. Yeah, we're back to these interesting market conditions, aren't we? I think I've said this before. That old Chinese curse about may you live in interesting times. Well, we sure do. And actually, I think the meaning of that was they're all interesting times. I guess all in their own way, right? So looking, just checking the indexes right now. Yeah, looks like, okay, we've got the Dow flat, slightly negative. But definitely we've got all the major indices off their highs. I put a graphic up there of the IWM, and let me just refresh my screen here for just a second. And let's see here. Let me update that because we were showing some gains on the Russell 2000 index. And this one, there's a little bit of a lag time on this one. I'm showing you right here. Let me pull up what I've got here. Nonetheless, the point being, what we have here on the major indexes as of today, we do have the indexes off their highs, and we do have right now, the Russell 2000 IWM ETF still at 74.04, so a gain of half a percentage point. That's good. And don't forget, we do focus on the small caps here on this show. Those are often the ones that are the harbinger of what is happening in the market. Sometimes, as Tom and I often discuss when I am a guest on his show, and I'll be on there a little later on today, this afternoon, we do talk about the fact that it is these smaller stocks that are frequently the first ones out of the gate in a new market uptrend, but also they can decline at greater percentage rates than some of their larger cap brethren. And you just have to be very, very aware of what they might be showing you. Now, today, obviously, if you were watching a little bit of the news this morning, I was just watching some of the financial channels, and apparently there was some great anticipation, actually moderate anticipation, about some news that might come from this emergency G7 meeting. Apparently, people wondering whether Germany, Angela Merkel, will cave a little bit, but it doesn't. It looks like some of that earlier optimism is fading a bit. As you hear me say often on here, I'm watching what the trends are showing me, what the charts are showing me, not getting into any kind of anticipation about what the news might be. The big thing right now is I'm protecting capital. That's really the name of the game at this point. We just launched the Low Price Leaders newsletter a few weeks back, and it's a challenging time in the market, but we've had a couple of winning trades lately. We have been able to capitalize a bit on some of the downside, and there could be more room ahead to do that. So just taking a look, but definitely protecting the capital too. One of the things is, if I have a winning trade, I don't want it to jump back into the loss column. So one of the things that I will do is either take partial profits, maybe take part of the position off the table, or even just sell, get out altogether, let the market sort out what it wants to do, and if the uptrend resumes, get back in. There are markets where the trend is more clear. You can watch some of the shorter-term moving averages and even the medium-term moving averages, and you can make some buy, hold, or sell decisions based upon that. A little bit these days, just with some of the volatility going on, some of the indecision, not always a bad idea to just capture some gains. And if it means going back in at some point, that's fine. You can always do that. as I've mentioned before, I don't day trade. I'm not looking for intraday sort of target prices in and out. However, there might be occasions in some of these extremely volatile markets where indecision is really reigning that you might want to make some fast moves and be prepared to capture your profits or cut your losses very quickly. That's another one of the methodologies that I'm using in the Low Price Leaders newsletter. So what we do in there, we're looking at stocks that have market cap. Well, there's two categories. There's the small caps, and obviously the name of this show is the Small Cap Roundup. So we have stocks that have a market cap of below $2 billion, okay? And I'm looking at technical strength. I do want to see moving average support. I am most of the time screening for fundamental strength. There are a few of these subsectors. For example, the biotech area is one where you might have some revenue, but since that's such an R&D heavy industry, and a lot of those companies really are set up as either as acquisition targets, that you might not have earnings in a lot of those cases, but sometimes the momentum to the upside means there is a trading opportunity in some of those. A lot of those hail from the small cap universe. The other group that we look at in the newsletter is exactly as the name suggests, low price leaders. Stocks priced between $5 and $12. That is often very fertile ground for getting in on something prior to a big run-up. And there are plenty of examples of stocks that have begun their rally in that $5 to $12 range and have gone on to sport much bigger gains. Of course, right now, you're just not really seeing that kind of strength. Not a time to be making new buys. I've been saying that just about since the inception of the newsletter. We had a very brief rally attempt at the end of April, but it failed, and that happens. A lot of times you might see investors jumping into stocks in heavy volume, which would confirm a new rally. But then you'll see it just as quickly fizzle. And again, I think with all the focus that we're seeing these days on Europe and justifiably so, I'm not dismissing that. Sometimes I tend to laugh about the macro forecasts because it really is seems to me just pulling opinions out of thin air. And how I understand that a lot of the people making these projections are relying on models, but we've seen very, very often that these so-called quote-unquote black swans have been occurring. In other words, events that nobody could have forecast. They just seem to be, and there's a book about this. Nissam Nicholas Taleb, I believe is his name, Black Swan. Get the book. It's a very good book. And he discusses why these events, which are occurring with more and more frequency, how they do affect the markets and how to interpret them. And that's very important because we're just seeing that a lot these days. A little miniature example of it this morning, not terribly significant probably, but was the anticipation of what might happen in this G7 meeting, and tiny little equity rally based on some of that, and then a pullback when it seemed to become apparent that there really was no earth-shattering news developing out of that. So you're seeing a lot of this more and more frequently. So in any case, I'm looking at the trends. I'm not looking at macro forecasts. You're never going to hear me make any kind of prediction like, buy into sector X right now because the global macro just looks like that's going to be terrific. Too much can happen between now and then, and even if that prediction does eventually come true, you might have your money parked in some dog over the long term. Let me put up a chart here, and this is obviously not a small cap I'm going to put up, but it's going to perhaps illustrate a little bit. You can see the strength of the trends playing out on the chart. So what I put up here was a chart of Whole Foods. I put this up on Tiger TV, WFM, and I just like this because this illustrates kind of what I'm talking about. Is there a trend right now of individuals being more attentive to their health, as well as, unfortunately, read into this what you will, as well as governments throughout the United States particularly, also becoming more attentive to what people are eating? Government intervention aside, I do believe that more and more people, not everybody, of course, and not all the time, but more and more people are recognizing the need to be healthier, that, you're really not going to be functioning at optimal levels if you stuff yourself with Coca-Cola and Doritos all day long, unfortunately. So Whole Foods is a stock that is capitalizing on that trend. I've talked about a few others, again, not necessarily small caps, but I just kind of want to continue on this theme. Hain Celestial is one that's been doing pretty nicely along these lines. So there are some macro trends, but my point being the charts will show you whether the stocks, the companies are capitalizing on these trends. You don't have to guess and make any kind of forecast about this. So even looking at the chart of Hain right now, it is correcting. You don't know how long that's going to correct. And frankly, rather than trying to make some long bets on some of these, there are some ways to capitalize on these particular market conditions right now. Such as some of these inverse ETFs could be some good trading vehicles to capture some of the downside. Okay? And that's I'll give you a little clue. That is something that we do talk about in the Low Price Leaders newsletter, and something that we've been able to capture a few gains using that inverse ETF strategy. So, so just looking at Hain, it's a good chart right now. This is a mid-cap. By some definitions, it actually would be considered a small cap. The indexes consider a small cap anything under $3 billion. I personally like the $2 billion to $3 billion area as well, and I talk about it sometimes on the show here because that's another area that frequently holds a great deal of potential, and you can see stocks taking off in that $2 billion to $3 billion area and sporting quite a few gains. Right now, we don't know what's going on in the market. We're in a downtrend. You don't know how much longer, how much further a stock can fall after you make a purchase. So it's risky to jump in there. So even though Hain is a good chart, I thought that chart of Whole Foods was also a good chart. You don't want to jump in. What I want to do, we've got a break coming up here. I'm going to, in the next segment, we'll look at a few recent IPOs because that's something else, and I will look at some small caps in particular. I have a number of small caps to look at. And then we have a guest coming up. We have Bob Lang from Explosive Options. He will be joining us after the break here. You may have heard him on Ken Shreve's show. And Bob and I are going to discuss some of the small caps that he's looking at. He's a fellow writer at thestreet.com along with me, so really looking forward to having Bob join us. Stick around, 877-927-6648. You might also want to give me a call. We'll talk about some of your small cap questions.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, back here on the Small Cap Roundup. I'm your host, Kate Stalter. We were talking about some of these natural foods companies before the break. Happened to check my email there during the commercial. I got a promotional email from Whole Foods having a one-day sale tomorrow. Now, I'm not going to be able to partake in that because I'm going to be on my way to the Traders Expo in Dallas. I mentioned this last week on the show. I'm going to be out there just for a couple days, just a very quick trip through. I'm going to be doing some in-studio videos most of the time, so I won't really be out and about at the show too much, unfortunately. However, if you are going to be there, if you're in the Dallas area, please stop by, because I tell you when, I will be at the moneyshow.com booth at between about 1 p.m. and 2:30 p.m. on Thursday. So if you are a listener to the show, if you're part of the TFNN family out there, please stop by. Would very much like to meet you. I was at the World Money Show Orlando a few months ago. Had a great opportunity to meet several of you there, and that was just a tremendous experience. So if you are listening to this, if you are in the Dallas area, it's at the Hyatt Reunion. And as I mentioned last week, I really don't know Dallas. You'll have to kind of look that up. Or just look up Traders Expo 2012 Dallas, and it's at the Hyatt Reunion. So hope to see you there. Okay. I put up a chart there of Nation Star Mortgage. I mentioned before the break I wanted to take a look at some recent IPOs. And, you know, I think the word IPO has kind of been slandered with this whole Facebook debacle recently. And it's I was watching one of the financial networks this morning, and they were reading an email that they had gotten from somebody saying it's almost as if you're cheering on Facebook to fall. I don't think they are necessarily literally doing that. I'll give them the credit that they don't really, I don't think they really do care that much. However, from a programming standpoint, I do think it probably makes a bit more of an interesting program. What's the German phrase? Schadenfreude, right? We got some of that going on, I think, with perhaps people looking. Although, as I understand, it is showing a bounce today. Facebook is. I haven't looked at it yet today, and I'm not going to put up a chart because I want to talk about Nation Star Mortgage Holdings. NSM is the ticker. This is a small cap market cap of about $1.7 billion. Now, you didn't hear about this one when it went public, did you? This made its public market debut. It's a NYSE stock. Went public in March at $14 a share. It is trading now, let's see, right around $19.70. So, what's that? About a 40-something% gain since going public. So, not bad. That's not bad at all. And take a look at what we have on here. This is just a nice chart. And that's one of these recent IPOs that you're not going to hear so much about, but they can be very, very lucrative, good names to watch. Just sweep all the Facebook hysteria aside, and I'm going to be talking a lot about this on the show in the coming weeks and months. Now, I understand we have a caller who wants to talk about the large cap I was just talking about, Whole Foods. I'll put the chart back up there. Hi, we have Robert from Chicago. Hi, Robert.
Okay, thanks for taking my call.
Hi, great to talk to you. What's going on? So you were looking at Whole Foods?
Yeah, well, I was actually in that Whole Foods there in Santa Fe, and it's a nice Whole Foods.
It is. There's two of them actually, and they're like right across the street from each. Yeah, because one was a Wild Oats that got acquired.
Okay.
Yeah.
So I've had some success with Whole Foods, but unfortunately got out of it as it went into around the $80 area, as it rose to the $80 area, and I purchased it. And so I'm wondering, it has really held up well. Will I have another opportunity to get into it long?
I think so. Wait till the market gets back into a rally. I mean, this is one that's on my larger cap watch list here, and it's, they trade the same way. I would say the same thing if this were a smaller cap stock. I'm not going to be trading the market caps any differently here in this case. Let me see. Right now it's getting support. It's below its 10-day and 20-day averages. So even if you were in a bull market, you might just want to kind of sit there and let it rally a little bit more. Robert, this thing is getting terrific support along its 50-day, and I do think there could be another opportunity in this stock. So, yeah, great question. Thank you for calling in.
Thanks, Kate.
All right. We are going to our next break, and then after this, we'll have another Robert joining us. Bob Lang will be coming up after the break, and looking forward to speaking with him about some of his small cap picks and his strategy. Stick around. I'm Kate Stalter. This is the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we're back. We just had the European close and not seeing too much of a change on the U.S. indexes right now as a result of that. And, of course, we have some jubilation going on over in London. So you've got some of those markets closed for a couple days. I believe they reopen again tomorrow. So as I mentioned before the break, have a terrific guest who I'm very excited to speak with today. I interviewed Bob Lang recently for my the series called The Daily Guru that I do over on moneyshow.com. And those of you who listen to Ken Shreve's show here at TFNN, you may have heard Bob as a guest on Ken's show in the past. So, Bob, welcome. Great to be talking with you again.
Hi, Kate. How are you? It's always great to chat with you, and it's great to be on the show with you this morning.
Oh, absolutely, absolutely. I know, you trade all kinds of instruments here. Your website is called explosiveoptions.net. I'm looking at your website right now. Now, obviously, we want to talk about some small caps today. But I wanted to just begin by asking, give us your take on the market. What are you seeing out there? How are you trading right now? What do you suggest to our listeners that they do?
Well, as it relates to the market as a whole, it's been we've experienced quite a bit of distribution in the markets, and it started back in I want to say March earlier this year. And the rule of thumb that I've always followed, and I think you as well, is when the market is under distribution, you either get out of the way or you get short and play the downside. And it's interesting that you mentioned the show is about small caps. The small caps started signaling trouble in the market before the large caps did. So it's interesting how back in March and April and even early May, when we rallied huge on the first day, the small caps were leading things on the downside. So that was really the true indicator of where this market was headed. And look, I mean, we've lost nearly 9-10% over the past since the recent highs of about 1,400 in early April, and in the S&P 500. So, but it's interesting how the Russell 2000, if you look at I use that as a proxy for small caps, the IWM.
Mm-hmm.
That was sort of leading the markets down the road to I don't know, correction area right now where we're at early on. So that was really the early signal.
Bob, as you were speaking, I put up a chart of the IWM, and as you're speaking, the people who are watching on Tiger TV could see exactly that. Now, of course, the flip side is, and I remember it extremely well. I mean, it happens a lot, but I really remember March of 2009, how many of those more speculative, smaller names were just racing out of the gate and provided opportunity for some terrific gains very early on. So in other words, they can be some of the big technical winners when a new rally is brewing as well.
You're exactly right. And the flip side of that is, if the Russell 2000 or the small caps are leading on the downside, they're more likely to lead when the market turns going to the upside. And I would tell you, I would completely agree with you there, but I would tell you right now, it's a little bit too premature to be looking at that as leading the markets higher right now.
Oh my gosh, I know. It's I'm looking at it. It's kind of the IWM, and you're probably looking at this too. Kind of, doing the same thing all the other indexes are doing, notching a little gain. Yeah, we do not have a confirmed uptrend yet. That's way too premature. Now talk a little bit about how you might play the short side of this. And actually, I just used a word I hate. I actually hate that word play. I can't believe I just said it. But what might you do to capitalize on the short side here?
Right. Well, what I tend to do is I like to buy puts. All right. And if I'm playing, if I'm a directional player. So I'm either if we're in a bull trend and it's confirmed, then I'm buying calls, or perhaps even selling puts, which is bullish. Or if we're in a confirmed downtrend, I'm selling calls, taking in premium, or buying puts. I'm going to benefit when the market is going down. So that's really what I've been doing lately for the last, probably since the beginning of May. And when we got confirmation that the markets looked like they were in a very, very tough downtrend, I wanted to take advantage of that. And when volatility starts to rise, Kate, that's when I'm taking advantage of buying premium, even selling premium, taking that premium to the bank, and cashing those in. So this last couple weeks, for instance, I have my subscribers in the IWM options, put options, and we actually still have one that's outstanding, but we've been able to cash those in. I'm playing the spiders, and I'm also playing some select other names like the FAZ, the FAZ, which is bearish financials. But by and large, that's kind of how I've been playing it.
Now, I want to just step back a second. In addition to the explosive options, you're also an asset manager, but more on sort of the large cap side. Is that correct? Tell us a little bit about that.
Well, I'm an equal opportunity trader, Kate. It doesn't have to be large cap. It could be large cap, mid cap, small cap. Anything out there that gives me an opportunity to make money for my clients, I'm willing to listen to the story and to take a look at it. And if the chart's looking right to go with it, then I'm going with it. But So I'm willing to go anywhere around the universe that helps me make money.
Right. No, I completely understand. Let's take a look at some of the small cap watch list, because one thing that I do tell the subscribers and the listeners here at TFNN, if you have the thing you want to be doing in one of these market corrections is watching the stocks that are technically holding up. And you know what? There are quite a few of them right now. It's not everything has melted down the way you might think if you only watched some of the mainstream media these days. Anything that you're looking at as a potential watch list candidate, Bob?
Well, in specific name, not just yet, but what I will tell you, I would tell you this, Kate, is that the areas that have led the larger part of the markets down, the S&P and the Diamond, have also led the Russell 2000 down, which would be energy and financial names. So, I'd be looking at some of these, smaller cap, some of these regional names, regional banks that have been blasted and maybe have been washed out and maybe kind of turned a little bit. I'd look at like a Huntington Bank Corp, HBAN. I would. It's a cheaper name. Regions Financials as well too. These are sort of on the cusp regional names that will react much better if things that start to improve in the economy. Probably much better and come back much faster than the bigger bank names like Bank of America, J.P. Morgan, and Wells Fargo. That sort of stuff.
That's a great point, because I think sometimes, and I agree with you about some of these smaller banks. In fact, I was in one of these names in our Low Price Leaders newsletter. Did get out when the selling began, because obviously, as you know, one of the things I do is really cut the losses short and manage the risk here. And I know you agree that that's very important as well. But I agree with you, Bob. It's sometimes I think some of these regional banks get flushed out. What's it saying? Baby with the bathwater, just kind of all the financials get swept away.
That's exactly right. And you cannot be patient in this market. You have to have a tight leash. You have to, because this is I think this market really requires some bipolar medication, because we're going up huge and then we're coming down huge, and if you're not quick and you're not flexible enough and you're not willing to admit you made a mistake, or else your timing was wrong, you're going to be suffering, and you're going to get blasted, and if you can't make those adjustments, you're going to be quickly pushed to the side. And I know you're very, very careful in what you do in protecting yourself, and that's absolutely the way to be. And I think you're doing well by teaching people to do just that.
Yeah, I was thinking about, I mentioned before you were on the show today, Bob, we had that very short-lived little rally attempt at the end of April, and they don't always work out. But that's, unfortunately or fortunately, because it just depends on one's perspective, I suppose, you really have to be very, very vigilant right now as a trader, know what direction the market is going, and understand, as you're saying, protect yourself, get out of there, get on the short side if you have to. What else? Let's go back to some of your smaller cap watch list names, because I think the banks are an interesting watch list sector, some of these regional banks. What else are you looking at?
Well, I'm also looking at some of the, one of these days oil is going to stop falling. I'm not in the business of making predictions, and I know you're not either. But one of these days oil is going to stop dropping, and I think some of these smaller cap oil names are going to be solid. I mean, in fact, some of these mid cap names have fallen so much they're probably entering into your small cap universe. They were mid cap names probably 3 months ago, and now there's a whole bunch new names that are into your universe. You can choose any one of these things, and I think if you sit with these for a little while, and you're patient with those names, once this market, once the oil stops dropping, and once these things stop stabilize here, and the selling stops, then I think you're going to be in pretty good shape. But as far as energy goes, technology names also pretty good. I'd say a name like a Cirrus, CRUS, is a pretty good name there. In fact, there's we just talked energy a few minutes ago. Westport Innovations is a name that has some news today that is driving strongly today. I think I would put that one in the small cap universe.
What's the ticker?
Is the symbol.
What is it?
WPRT. And Westport Innovations is having a strong name day today. They're in that with clean energy. They're in that natural gas conversion field, and they did a deal with Caterpillar today to outfit some of their equipment with natural gas technology. So, that's one in the energy field that I would take a look at, keep on my watch list.
That's an interesting name because I was this is one of these kind of, I would consider it more speculative because there's no earnings, as you are aware. But look at the revenue growth. I mean, this is something that on that level has some potential. And sometimes I will take a look at these. I mean, typically I will look more at the earnings, but sometimes in some of these more speculative, maybe more R&D heavy industries, as this one is, you will have some of these opportunities where there's strong revenue growth and the chart can show good price action.
You may, and in addition, you may or may not have heard that I have an affinity for the fertilizer names, and
okay.
There's a name in there. Obviously, there's about 4 or 5 big ones that probably wouldn't qualify as a small cap name to keep an eye on, but like CF Industries and Potash, Mosaic,
right.
and Agrium. But there's a name out there that's a small cap that you might want to take a look at. There's also a niche player in that area. It's called Intrepid Potash, as simple as IPI. And I think that would probably qualify for being in the small cap universe. So that's another one that's got it creates potash. It also creates some other substances as well. And while the demand for potash has been somewhat muted over the first half of the year, I really believe the story for these companies is going to be in the second half, and certainly going to start July all the way through the end of the year.
Yeah, that's actually something else I was kind of talking about a little bit before you got on the show today, Bob. This is great, is about some of these more macro trends that you can't necessarily trade based on where you think the macro trend will go. But certainly one of the things that comes up with so many people I talk to, and I'm sure you too, is the growing world population, the growing need for food, and how some of these agriculture-related names could have some very good potential ahead.
Well, we're going to have they estimate something like 5 billion in population by the end of this decade, and people have to eat, and as diets change and they become people in China and India, and their diet changes, especially in China, people want to eat more chicken and more beef, and you have to have feed, and you have to be able to grow corn and rice and that sort of stuff. And not to mention that I don't know if you know the statistics. Did you know, Kate, that half the people on the planet eat soy and rice every single day? So 2.5 billion people eat soy and rice every single day. So so those are commodities that need to be that grow with fertilizer. So I mean that's not an area group that's going to be hit hard by inflation or even possibly an economic slowdown. People have to eat, and that's, you're exactly right. That's going to be a strong area for years to come.
We've got about a minute left here, Bob. What would be your trading advice for our audience right now at this juncture in the market?
Caution. Absolutely. You got to use caution. You got to use. Look, I mean, the one thing that I've tried to recognize and also pound into the heads of my subscribers and anybody who'll listen is listen to the markets. Listen and pay attention to what the market is saying, not what's on CNBC, not what pundits are saying, not what analysts are saying, because they're always going to want you in the market for as long as they possibly can. They don't care about what you're doing. You need to pay attention to listen to what the market is saying. And what it's telling me is to be careful, to be cautious here.
Right. Oh, excellent final words of wisdom. Bob, this is great. I so enjoy talking to you. I'll have to have you back sometime. Have a great trading day, and be careful out there. Your own words.
Thanks a lot, Kate. Always wonderful to be on with you. Have a great afternoon.
All right, you too. All right, everybody, stick around. Have one last segment today here on the Small Cap Roundup. I'll be right back after these messages.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back. This is the last segment of today's Small Cap Roundup. Always great to talk to Bob Lang. Really enjoy his perspective, and he and I share a lot of similar views. You know, and what he was saying there at the end about using caution in these markets, that is absolutely right. You know, you do hear me do a few little mini rants, and I'm not much in rant mood today, tell you the truth. Pretty excited to be heading out to the Traders Expo tomorrow, so maybe that's putting me in a good mood here. Happy to have profited a little bit from some of the short side in this market, but you don't want to get too giddy about that. But Bob is absolutely right. You know, you can use some options, you can use some inverse ETFs. There are ways to profit from the short side if you're careful, but to come back to the idea of being cautious, I really, more and more, I just cannot take these people that are out there who are giving advice about jump in now. Anytime the market trades lower, they're like, oh, jump in now. It's a great time to find bargains. Well, maybe. You can see some logic to that, but the truth is you don't know whether or not the market is going to keep heading lower. I mean, how many people would have said that in the autumn of 2007 or the early part of 2008? If you go back, there were people out there saying that. So just I believe it's safer, and there is plenty of research out there that can document the gains to be gotten from a strategy of waiting until there is some kind of confirmed uptrend in the market. Also, just to kind of come back to the idea of not using opinion. I want to come back to this recent IPO. I didn't really get to talk too much about the IPOs today like I wanted to, but we can come back to that next week. That's always a terrific topic, and something we can look at any time in the future. Coming back to this NSM, Nation Star Mortgage, which went public in March, very new company on the public markets in any case. And this is a private mortgage issuer, and I did catch some of the conversation that Tom and Steve were having earlier about the housing market, and look at the success of this particular stock right now. This is a really good reminder of keep your opinion out of it. Watch what the charts are telling you. Now, a few weeks ago, I had been writing about Standard Pacific, which is one of the home builders, and you see that this has sliced its 50-day line. But looking at SPF, Standard Pacific here, it's a small cap, much smaller than some of these, Toll Brothers, Lennar, some of these bigger names, much smaller company. Let me see here. SPF, I've got about a minute left here. Tell you a little bit about this. Market cap of about $900 million. Good liquidity, though. 3 million shares a day, and I imagine a lot of these home builders kind of get traded as sort of a basket of stocks. But in any case, so the fortunes of this one could, to some extent, rise and fall with the larger names, but it also is really could be victimized by some poor news. Nonetheless, even though it's below its 50-day line right now, you see it's well above that 200-day line, and could be another one to watch. Again, just to try to keep the opinion out of it of what you think is happening with homes, with the housing sector, with this terrible jobs market that we still are having to endure. Nonetheless, there are some housing-related names that are tending to hold up, so we might take a look at a few of those next week. But more so the NSM that I just looked at than SPF. I was just kind of showing you that as a little example. All right, Traders Expo Dallas. If you're in the Dallas area, I will be at the moneyshow.com booth between 1 and 2:30 p.m. Thursday. Hope to see you. Please introduce yourself. I'm Kate Stalter, signing off for the week. I will be back here with another edition of Small Cap Roundup next Tuesday.